Good morning, everyone, and welcome to the Daily Trader with Kevin Hinks. I'll be taking you to two paper money trades on two high-profile names today. First, Tesla, that has earnings coming out Tuesday after the bell, and then we'll look at Amazon. Their earnings aren't until May 6th, but we'll give you kind of an early look at their earnings play after that stock was downgraded today. So let's get right to our first trade of the day, and that is Tesla. Now, Tesla has earnings coming out after the bell tomorrow. The expected move in Tesla, about $20, just under $21, but the move for the week is it's $28, closer to $30. So you have to manage both of those. Both of those are good information to have. The one-day move and then the move for the entire week. So we're gonna base our call diagonal that we're gonna do based on the entire week. So you will get a move after the earnings event. This is a bullish trade in Tesla. So I went very short term. I went to the May 2nd expiration, bought the 230 call, which is right about well, actually it's a little lower now, so it's slightly out of the money. Then I sold the 260 call in this week. So the event week, I sold the 260 call, about $30 wide between that call diagonal. Can you move them down to the 225, 255? Yes, you can, but you're going to spend probably a little more money. I put this in around $13. It's trading about $11.50 now as the stock has moved lower. So you're getting this a little cheaper, but that 230 call is now, $4 or $5 out of the money. So that doesn't mean where the day will end. We have no idea. But right now, this is a $30 call diagonal, using the move for the day, using the move for the week, leaning more towards the move for the week. You can adjust that lower. Remember, the learning here is the strategy. How you adjust the strikes, what strikes you use, that is your own personal decision. So Tesla, you're looking for a move, in this case, towards the 260 strike. Whatever that short strike is, you're looking for a move towards that strike. And the risk on this trade, on this call diagonal, is the debit paid on that call diagonal. All right, there's our Tesla trade. Now let's get to Amazon. Amazon on a downgrade today. We're going to look at something in a little more passive. That is a short put butterfly in Amazon. So what we looked at, let me just bring that up for you. Hold on. There we go. So Amazon, what we looked at is we went out to the May 9th expiration. Now, the May 9th expiration is trading about a 61 implied volatility, but right now, if you go on the Thinkorswim profile, look on the calendar and hit Amazon, it'll show you that the earnings date is May 6th. So you always have to keep checking for that earnings date of May 6th. Is it moving? Because, like, now, here's the thing. It's now May 1st. See, you always have to check that these dates aren't moving. So now it's verified as a May 1st earnings event. It was May 6th last week. Now that it's been verified as May 1st. A little different story there. Now, what we're doing, we're moving after that. We're into the May 9th week. That event is in the May 6th week. You can see it by the 68 implied vol in May 2nd and the 61, just under 61 in the May 9th. We went out to May 9th, looked at the expected move of about $18, and we just went inside that with a more aggressive short put vertical. So I went to the May 9th expiration, sold the 155, 145 put vertical, $10 wide. The credit on that was around 180. It's around 208 now as the market has moved a little lower. So it's over $2 for the 155, 145 put vertical. Again, this is a risk-defined strategy where the max gain you can make is whatever credit you take in. Is it 180? Is it $2? That's the max gain. The risk is the width between the strikes minus whatever credit you take in. So if it's 180 and it's $10 strikes, it's $820 is the risk. If it's $2, it's the max gain is $2 and the most you can make is, or most you can lose is 800. So it's the width of the strikes minus whatever credit you take in is the risk on this trade. So those are our two trades for today. It's a long call diagonal as an earnings play in Tesla. It's a short put vertical after the earnings event in Amazon. That's our show for today, everyone. We'll see you tomorrow with another edition of The Daily Trader. I'm Kevin Hinks.